Good day, Ira Epstein with your metal market wrap-up, and this wrap-up is for Tuesday, the 29th of December, 2020, just about 5:15 in the afternoon. Before I get any further, I want to wish all a very happy new year and the best of trading to you in it. I truly appreciate you following me, helping me build this channel. We have big plans to expand it this year. We hope that works, but it all comes with you subscribing to it. It's free. Just do that, it helps us from there. And send us comments every now and then, like or dislike. Now, I'm not going to be back until the earliest is Friday, January 7th. So remember, we only have a day and a half this week of trading. Tomorrow's the last full day, then Thursday's a half day. You're not even open Monday. I will be back in Chicago late in the week next week, and assuming I got everything settled, I might even put out updates Friday. So be ready for that, but that'll be a week from Friday. So I hope you miss me. In the meantime, one of the things you can do during all this is right here, my morning futures subscriber video. Because with that, that pays for all this to work, but it's more than that. I really believe that if you're like me, I remember the old days. I used to wait to get certain advisory letters in, and if you subscribed, you had the guts on a phone to call somebody, what do you think of this? And if they were nice enough, they'd answer it. But I needed a mentor. I was fortunate, unlike many of you younger people out there, and some of the older, that at the Board of Trade in the Chicago Merc, I could go from office to office, and you've heard of the Wizards of Trading. I knew just about all these guys, and I'd ask questions. They'd help me. I got my start with people just taking me under their wing. Well, I can do that and I think help you. I do it via videos, then I do it via, with the subscription, my live webinars, which there'll be more of this year, and then I back that all up with the last thing, and you can write me, and I do answer your responses when I get a chance. I'm not saying I'll answer them every 2 seconds, as you can imagine, but it is something that you want to consider. How do you get this? You just go to our website at www.iraepstein.com, and at the end of that, you will see, if you go to research, everything's answered there. Okay, that's out of the way. Let's take a last look at the charts before I get too far along here. If we take a look right now, and let's get to the next chart if I could on this. Here we go. Yeah, in the gold. The gold is staying under, on a weekly closing basis so far, the 18-week average of closes. And since this high point here, we've had a number of weeks down. Maybe when it gets back over it like it did here, that would be a sign the market wants to again move up. Until that occurs, no. You've been languishing in this market, having lots of problems. You see it on the charts right through here. Now, for the year, what I think a lot of traders are looking forward to is, will there be the spending that we think the Democrats might bring to the table in more COVID relief, infrastructure, and the like? Certainly, if they were to win the 2 seats in Georgia, the odds of that increase rather dramatically. If they don't, then they face just what President Trump did to a degree, where there'll be the stonewalling against crazy spending in whatever you define crazy as. And I don't want to get caught up on that, but that's what you'll hear the other side saying, that the economy can't afford that. We've heard the opposite from the Fed chair, that he really needs a lot of this to be done so that the economy gets good footing. But it's been fighting with gold and silver. Silver's come alive, not the gold. Gold still has a pattern of lower highs, lower lows, an overall downtrend pattern. It's staying over the 18-week average, and has since about, the first third of the month in December, and the market's been able to climb back up. The problem for the market is it seems to be caught between the 18-day and the 100-day moving average of closes, with the Bollinger Band capping the top areas. Now, as you know, I'm going to do a mini course. This is for the advanced people, really. I'm not going to, when I do this course, try to teach Bollinger Bands from scratch. That's in my charting course. This is now going to be a supplemental course, and I'm going to teach all that I know in that for you to give you more ideas, but then set disciplines with it. That'll be when I come back, not the first thing I do, but it'll be in January, February that I roll that out, along with the stochastic course as well. Speaking of stochastics, they're just drifting sideways. They're not in overbought territory, but they're not bullish either. So you have a market that's just sort of sitting here End of the year, yeah, I can understand that. The gold-silver ratio, well, back in November when the market got under this red line, which is the 18-day moving average of closes of the ratio, well, the market has stayed under it, and during that time, silver has gained on gold. In addition, you know, copper's been a son of a gun market to the upside, and we're looking for industry to pick up, and silver's used in an awful lot of electronic components. That's had its move. So silver has done way better than the gold market. It too, though, is, by the way, is a question as to what do you do right here. It keeps hitting the upper Bollinger Band, backing off, but unlike the gold, it is in a bullish configuration. I'll leave you with this one thing that looks to me like it might happen when I'm gone. If silver can hold together and not get a hard hit, we're liable to get a bullish crossover where the 18-day gets over the 100. That would give you this configuration. The 200-day down here, then the 100-day down here, and the 18 over that all. That is a bullish crossover. And that is how you'd want longer-term bull charts to look. So I am not saying what the market might or might not do, but I've got to point that out to you. Copper. You now have the pattern of lower highs, lower lows, right into the 18-day average. And during this whole process, what have you done? You've taken the Bollinger Bands and you've narrowed it in to the sideways action. From sideways action come trends. Markets need to consolidate. You did a lot of consolidation right here. See all that behind me? Before this occurred. Keep that in the back of your mind. Always important. Platinum. Platinum's going from the lower Bollinger Band and in a matter of about a week and a half to the upper band. I still don't see anything crystal clear in that market. It's not as good looking a chart as the silver. And you've done pretty much the same in the palladium. You had that one spurt up yesterday. Well, that was a one-day event. Over the Bollinger Band, couldn't hold it, and bang, right back down. So you got to 24.76 and a half, and you're $140 less than that now. That's a lot of money. Dollar index still bearish. This is a trade that has loaded up traders on the short side. This is one of the most popular currency trades out there. I too am long-term bearish in the dollar, and the reason is we're going to keep loading up spending. I really believe that, and the market will say, well, other economies aren't doing it, and you get that parlance between the two. That's okay, but that's what I see until the trend changes at this point. So I want to remind you, my morning videos, you know, to go to our website at www.iraepstein.com. I'm Ira Epstein. You have a great new year. I'll see you all hopefully on January 7th. Take care.